what do you think about the LP side of the equation? So the LPs for pre-seed and seed funds, I would assume, are quite different than the A and B, just given relative check size. You're probably not raising from large endowments or pension funds, unless I'm wrong. So what are you hearing and seeing from LPs at this stage, and who are they?
I'm happy to jump in. So our LP mix is we've got a number of GPs at later stage funds. We've got a number of high net worth, folks that we've worked with in the past, or successful entrepreneurs in Austin, Houston, Dallas. We've got a lot of family offices and a little bit of fund to fund. So we're in general seeing a trend of more institutional capital coming towards fund to funds. I think that's going to be a big source of capital for funds like ours over the next decade. But usually on fund ones, the source of capital is high net worths and family office. And in Texas, that there has not historically been an appetite with a lot of oil and gas families to invest in venture. And I think that's changing now, which is great to see. So I think we're going to see, a lot of these small seed funds get off the ground with family office capital. And I think we're going to see a bigger movement of Texas family offices into the asset class, and that'll likely be into small funds like ours. So we're pretty excited about that in general.
Are we seeing the LP market for Texas? Like, how does Austin compare? Is it really kind of across the board? Are you needed to go more to Houston and Dallas? Like, what are we thinking about the family office and high net worth scene?
Our experience is that people in Austin, a lot of the source of wealth is venture-backed companies in Austin, in addition to oil and gas, real estate, all of that type of stuff. And so we tend to see more family offices interested in the asset class in general in Austin. And then Houston, Dallas, San Antonio, there's actually way more capital, but it's less interested in the asset class. So we find ourselves doing a lot of education in Houston, Dallas, San Antonio. But even in kind of the past couple of years of fundraising, I feel like the interest in venture has dramatically improved.
So, Katelyn, talk a little bit about some of your experience with the LP side, especially given you changed markets and you moved to Austin. How's that kind of affected the story, maybe positively or negatively?
Yeah, I have a probably similar mix of LPs, like family offices, some fund to funds, strategics in my case, high net worth individuals. I was thinking about this because I saw it in your interview guide. I actually don't have a single Texas LP right now. Part of fundraising on a, we were talking about how it takes 6 months from meeting a founder to investing in a company. Well, I think to get an LP, it takes at least 12 months minimum, maybe longer. Like, people really want to know you over time. They want to partner with you. And it's a long-term game, a really long relationship, at least 10 years. In a pre-seed fund, half your portfolio could fail and go out of business. But if you're investing in a manager, that's at least 10 years, if not more, and you really have to trust them. So at least for me, it's still the beginning of the beginning for me to develop some of those relationships. But I just love the independent spirit here in Texas and in Austin. And I think people have a real interest in building the future. And then there are a ton of serial entrepreneurs here that have exited their companies recently that are thinking about what's next and want to participate in interesting ways in the ecosystem. So I'm optimistic, but it's still super early days for me.